बिस्मिल्लाहिर्रहमानिर्रहीम। रियाज चुनारा साहब, मैनेजिंग डायरेक्टर निबाह पाकिस्तान, Sayyid Salim Raza, chairman of the jury and respected jury members, CEOs of banks and financial institutions, our former deputy governors and Governor Yasin Anwar Saab and Mansoor Rahman Saab, AF Ferguson executives, his partner Salman Sahib, distinguished guests, ladies and gentlemen, Assalamu alaikum and a very good evening. It is a pleasure to be here today, this evening at the 9th Pakistan Banking Awards 2024. I believe that these awards help us foster competition, encourage innovation, and inspire the development of new products and solutions to meet the ever-growing banking needs of the customers. I would like to extend my heartfelt gratitude to Nibah Pakistan, Dan Media Group, and AF Ferguson for successfully convening these prestigious awards every year since 2016. I am also grateful to the honorable jury members for judiciously performing this demanding job. Ladies and gentlemen, while we are here to recognize the best institutions across various categories, I would like to take this opportunity to highlight the collective performance of the banking sector as a whole. Specifically, I want to underscore areas where we have excelled, as well as those where further attention and improvements are needed. But before I do that, since Salim Raza Saab and before that Hamid Harun Saab has also touched upon some recent economic developments, so let me add few points about what Salim Raza Saab has said. So first of all, on the external account, Salim Raza Saab has mentioned that our reserves are at $11.5 billion. So I'm very pleased to share that we have today closed our reserves above $12 billion. And this is despite the fact that we have made debt repayments during these first 5 months of this fiscal year of more than $4.5 billion, and also despite the fact that we have received additional inflows of only $3.2 billion. So we have managed more than $1 billion debt repayments and also increased our reserves from $9.4 billion at the end of June to above $12 billion by the end of November 2024. And also we know that our public external debt was in June 2024 was around $100 billion. And even today, our external debt is less than $100 billion. So during the last almost 2.5 years, we have not added any additional foreign debt. But before that, if we look at the foreign debt in 2015, it was $65 billion in 2015, and it during the next 7 years has grown to about $100 billion. So $5 billion increase in our external debt every year before the 2022. Every year, for 7 years, up to June 2022. And since then, it's almost at the same level. Second point, obviously, there were various reasons for this growth in debt. Key important factor was our huge external deficit, current account deficit, which increased to $17.5 billion during the fiscal year 2022. And it was 4.7% of GDP, which was obviously quite high and was not affordable for a country like Pakistan. So we have to take certain difficult policy as well as regulatory measures which were unpleasant. It has impacted the economy, but obviously there were no other option. So we have to take these tough decisions. But Alhamdulillah, now the things have stabilized, and for the first 4 months, July to October of this fiscal year, there is a current account surplus of more than $200 million. And for this year also, inshallah, we will have good external account for the month of November also. The second point I wanted to comment on, Salim Raza Saab mentioned about debt servicing of 10 trillion for the current fiscal year. And I agree that there is a budget allocation of 9.8 trillion, 9.10 trillion rupees. And I agree that there is a allocation of 9.8 trillion rupees for the current fiscal year for servicing of debt. But actually, we will be ending up much lower. And I have recently mentioned also in one of the media talk that our debt servicing will not exceed 8.5 trillion rupees, which will be 1.3 trillion rupees less than what have been budgeted in the last fiscal budget. And I'm hoping that as we proceed during this fiscal year, we'll be able to have even more savings, and it will be in fact lower than even 8.5 trillion rupees. So I just wanted to have two points added to what Salim Saab have said. Coming back to the banking sector, because today we are having banking awards, so I will just focus on the performance of banks, and some will make some points about further improving the performance of the banking sector, because all these the honorable bankers and other financial institutions executives are here, so we'll focus on the performance of banking sector more particularly. So Pakistan's banking industry has played an important role in the country's economic development over a period of time. Despite the economy faced many challenges and shocks over time, our banking sector has remained sound and continued to support the economy through uninterrupted provision of financial services. Key financial indicators of our banking system, such as capital adequacy, asset quality, and profitability, continue to depict strong performance than many regional peers. Having said this, there is still a considerable ground to be covered, especially in improving financial deepening and financial inclusion in the country. Our banking sector's assets as percentage of GDP stands at the lowest position compared to other regional economies. As of June 2024, outstanding deposits and advances in banking in Pakistan were only 26% and 11% of GDP, respectively, far below the regional average of 75% and 67%. And the size of SME loans is hardly 1% of the GDP. It is a fact that our government's domestic borrowings needs have been quite high, and that may have affected the availability of loanable funds for the private sector. But it would be interesting to ask if we are unique in this regard. Data suggests that this is indeed not the case. Government domestic debt as a percentage of GDP in Pakistan at 45% is lower than that of Sri Lanka at 62%, India at 48%, and Malaysia at 49%. Similarly, our banking system's net credit to government in terms of GDP of around 29% is comparable to India's 26%. Yet, the banking sector of these countries have managed to grow their lending to the private sector and overall asset base consistently than our banks. In my assessment, our inability to grow the deposit base and increase financial inclusion at a pace similar to our regional peers largely explains our lagged performance. Banks' deposits as a percentage of GDP in Pakistan have risen from 22% in 2022 to only 26% in 2023. From 22% in 2022 to only 26% in 2023. During the same period, deposit base in the banking sectors of other regional economies has grown at a much faster pace. Ladies and gentlemen, to address these long-standing issues, I would like to suggest 5 core areas that our banks must focus on. First, banks need to rethink their business model, reassess their priorities, and play a more active role in the financial intermediation. It is important that our banking sector serves the needs of not just the government and big corporates, but also small depositors and borrowers. A broad-based customer network and a well-diversified asset base are essential for sustainable profits for the banks over long run. Second, banks must leverage technology. The ingrained challenges require our banks to think outside the box and capitalize on cost-effective alternate delivery channels to enhance the access, usage, and quality of financial services. With around 193 million mobile service subscribers, banks can utilize this connectivity to reach out to millions of potential new customers. Third, I encourage banks to play an active role in improving the financial literacy. By providing individuals with the necessary knowledge and skills to manage their finances wisely, we empower them to break the cycle of poverty, plan for the future, and seize opportunities for economic development. Fourth, banks and fintechs should partner with each other to provide innovative products for customers that are otherwise not viable on standalone basis. For banks, such partnerships can help penetrate largely untapped segments like retail businesses and micro and small medium enterprises, yielding beneficial outcomes for all stakeholders. And finally, banks should also work on improving user experience and customer service. They must safeguard the interest of customers, ensuring that fairness and integrity are not compromised in the pursuit of profit or innovation. With that, I would like to once again commend the organizers for their efforts and congratulate all the nominees and winners. Let us continue to strive for excellence and work together to foster a more inclusive, dynamic, and future-ready financial ecosystem. I look forward to seeing you continue to pursue excellence and contribute to the betterment of our economy and people. Last but not the least, please join me in a big round of applause for our expert jury members and the teams of NIBAF, Dawn Media Group, and AF Ferguson, who have worked hard to make this event a success. Thank you so much for your attention, please.
A very warm welcome to everyone here. These awards cover 2024, which had posed a number of challenges. What the country looks for from its banking institutions is an increase in inclusiveness, in financial inclusion and development. Now, in terms of financial inclusion, a great deal of progress was made during 24. But in terms of development lending, perhaps because of economic circumstances, because of economic circumstances, the performance was not particularly striking. But I'm not going to afflict you with my usual dog and pony show on how banks aren't doing what they should be doing. So there are no slides, and you might be relieved to hear. Now, remarkable macro stabilization has actually been achieved this year. Inflation is down from about 30% last year. The IMF forecasts 9.5% for this financial year. Independent economists think it'll be nearer 7.5 maybe. Interest rates have been cut by 7% since the middle of the year. But they're still positive given that inflation is falling, so the market expects further reduction. The exchange rate has been managed very effectively, and our reserves have grown from about 6.5 billion this time last year to 11.5 billion now. So, full marks to the State Bank for both tough interest rate management but necessary, and for being able to keep the market supplied with foreign exchange at a very difficult time. The Roshan digital accounts, the overseas Pakistanis' investment this year in treasury bills has grown by about 300 million, and there's about $250 million of fresh inflow in the equity markets. So, all this has been very positive, and the fiscal performance by the government remains outstanding as well. The primary surplus this year in the first quarter ran at about 3%, which is remarkable. The overall surplus is about 1.6, and I frankly don't remember in all my years of looking at these things. The data looking as sound as this. There's a small tax shortfall for the FBR of I think 1.5%, but with 9 months left in the year, there's a very great likelihood that they will be able to catch up. As the retail tax begins to bite, begins to gain traction, also talk of agricultural taxes. Let's see, a framework should be ready by early next year. Anyway, so the FBR target, as steep and challenging as it is, should not be out of reach. Now, so stabilization has been achieved.